Hello, thank you for tuning in. In this video, we'll be talking about financial institutions. There are a lot of financial institutions, so buckle up. Let's get started. So, financial institutions, what are they? So, financial institutions are basically corporations. Okay, let's get that clear. They're corporations. So what are corporations? I made a separate video on the different types of firms. I'll make sure to leave a link on that at the end of this video, but simply they're legal entities. So let's use that. So financial institutions are legal entities basically that help with financial services. So financial institutions are entities that provide financial services, any services that is related to money. You could use financial institutions, and most of them are there to help you invest your money or help you to safeguard in money related issues, and we'll get to that. But before that, let us learn how money flows. It is very important to think money as something that flows like water in a stream of river or something like that. So just imagine water flowing. So just imagine money just like that. So let's say people like you and me, we save, and some people they save, some people they don't. So let's do savers. Savers deposit their money into banks. Those are the most common way to deposit funds is to deposit your funds into a bank. Now, bank is a financial institutions, and just as we'll see briefly. So banks, what they do is they have to pay us some interest on our money, right? So what they do is they lend the money to other businesses and people at a much higher rate, and they just profit off from that spread. So the businesses, they borrow the money and they take on projects and they try to increase their revenue. And they eventually hire people. And they give salaries to those people, and that money goes to those savers, and the cycle goes on. So this is not the exact flow, right? This is just a simple flow of money. There, in the real world, you can make the flow of money as complex as you would like. Okay, so another important concept is that one man's income is another man's expense. Okay, and let us talk about financial institutions. Number one, we have banks and credit unions. The thing that these two corporations have is that their inflow of cash usually comes in the term of deposits, saving deposits, and they lend this out as loans to other people and other businesses at a higher rate. And as we said, they profit from the spread in the rates. Okay, so that is what they do. Number two, we have financial institution called the insurance companies. They specialize in insurance business, and certain banks buy these insurance companies, or the insurance company stays by themselves, but the flow of money into their firms are called premiums, and it goes out through investments. So they invest in stocks and bonds. They invest so that if someone claims on their insurance, they're able to pay back from their investments. Hopefully their investments grow. Number three, we have institution called the pension funds. And usually how the cash flows into a pension fund is through workplace savings, right? From the workplace, they transfer your money into a fund, and by the time you retire, your pension kicks in. And hopefully, if you're in a very good system, if your country has a very good system, you're lucky to get pension. And so how does the pension fund make money? So they also invest in stocks and bonds and many other instruments. Now let us call them as financial instruments. So we have these financial instruments, and the pension funds invest in them, and hopefully they go up in value. So they invest is a very good term. They go up in value and they make money and they pay back to people when they retire. Number 4, we have mutual funds. The mutual funds, you have to know this. They are the most advertised financial institution, also among banks. So the mutual funds, people usually go to a mutual fund and they want to save their money, they want to invest their money, but they don't know how to do it. So they want to give it to a mutual fund. And the mutual fund, the process they do is called investing, and they invest. And what it happens is that is how they make returns. And number 5, hedge funds. Hedge funds are similar. They also invest in financial instruments, but the inflow of cash usually comes from very wealthy people who want to save, and sometimes mutual funds also give their money to hedge funds to manage, because hedge funds have less rules to follow than mutual funds do. So hedge funds are what we call, they are less regulated than the mutual funds do. They have less rules. They could do a lot of stuff than just invest in financial instruments. Their main goal is to make returns for their investors, but obviously in a legal way. So they do two stuff, which is called investing and short-term trading. They're two different concepts that I feel that they convey two different meanings. Okay, so number 6. In number 6, we have venture capital funds. So what are venture capital funds? Cash flows into them through the same as hedge funds, savings from very wealthy people, and it goes out to investing in startups. They invest in startups and they believe the startup will eventually get into an IPO and make money for them. So they have an entry strategy and an exit strategy. Okay, number 7, we have something called the private equity funds or private equity institutions. Now, these are very interesting institutions. So what does a private equity do? So let us first see that they get money from the same savings of wealthy people and also from mutual funds. Anyone who is very billions of dollars can hopefully invest in private equity funds. And what happens is that they purchase whole businesses by part using their own money and also borrowing money. So they purchase whole companies, and what happens is that they believe for some reason the company is undervalued, and they buy the company. Maybe the management is very bad, so they do some certain changes in the management and they increase the company's value. They make it more wealthy company and more good company, and they profit from that eventually. So thank you for listening to this video. If you really liked about this video and learned something new, please feel free to subscribe. As always, thank you for your time.